And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here alongside Alix Steel. We're taking you to the closing bell with a global simulcast starting now. Scarlet Fu joining us in the TV studio. Massar and Matt Miller in the radio booth as we welcome our audiences across our Bloomberg platforms, including our partnership with YouTube. Massar, the turnaround Tuesday turning into a bit of a wobble on this Wednesday. Stocks now at session lows.
Yeah, right. Really interesting from how we started the day to where we are right now with just a few minutes to go. Having said that, you and I, Matt, have been talking a lot about the semiconductor space. Just the swing that we've seen, that group has been down more than 3%, and it's been up as much as almost 4%. So you're talking about a 7% swing, Scarlett.
Yeah, definitely. And I think it's notable here that we started to see equity indexes give up their gains well before the final hour of trading. Yesterday, if you'll recall, we had a swoon into the close. We still finished up, but definitely off our highs. Now we've completely given up our advances. And Quincy Cosby was telling us earlier that that's a real sign that this unwind has more to go.
Yeah, and that does, in many ways doesn't surprise me at all. At JP Morgan, Market Intelligence this morning had their note out, and I love this quote, you guys. They were saying that basically this was a sell-off that was coming. It was just disguised as a growth scare. And if that's the case, you can obviously say that there's a lot more downside to come then. We haven't really reversed that 200-day moving average for the S&P.
And as a lot of our guests point out, too, I mean, a lot of this might also be just profit-taking, good old-fashioned profit-taking when you consider the gains that we've had through the first few months of the year.
Yep, indeed. And you're taking a look at the indices really rolling over here. You're looking at the S&P off by about 0.8%. Now, to me, the question is, guys, what happens into tomorrow?
All right, well, let's talk about today for 1 second here as we get the closing bells in New York right across the screen, which is a big turnaround from where we were at the start of the session when it looked like stocks were set to rally 1 or 2%, closing lower by about 1% across the board. The Dow Jones Industrial Average down 0.6%, S&P down 0.8%, NASDAQ down more than 1% on the day, and the Russell 2000, Carol, going to close out the day lower by 29 points or 1.4%.
All right, so back to the big caps I go, as you know I like to do. Most names, guys, lower in today's trade by the end. Very different picture again at the open today. 358 names in the S&P 500 losing ground today, Scarlett, 144 to the upside.
Yep, and in terms of the 11 sector groups in the S&P 500, 7 of them are lower. Consumer discretionary, materials, and infotech leading the way down, each losing at least 1.33%. Your outperformers here are really your traditional defensive groups. Utility is up 0.5%. Energy gaining about 0.5%. Financials barely positive, and staples unchanged to barely positive.
All right, guys, to the individual gainers we go. This one, number one gainer in both the S&P 500, the NASDAQ 100. We're talking about Fortinet. It was up 25% today's session, jumping as much as 27%, biggest intraday rise since about November of 2009. So quite a bump to the upside. Company forecasted adjusted earnings per share that beat estimates. Analysts also are really positive about billings growth and note that margins were the strongest metric in the second quarter report. Axon Enterprise, also a major outperformer, up about 18% in today's session, top in the S&P. Company makes tasers, they make body cameras, boosted its revenue guidance for the full year. Yes, the guidance beat the average analyst estimate, so some really outperformance. One more for you, Latham Group. Ticker, great tipper. Ticker is SWIM. Company makes and builds in-ground residential pools. It reported adjusted EBITDA for the second quarter exceeded even the highest estimate among analysts tracked by Bloomberg, so some really outperformance there, Matt. So
you ever been tased?
No.
Any of you guys ever been tased?
No.
It is a pretty interesting experience.
Why have you been tased?
I tased myself once when I was working as a security guard in a Russian disco in southern Germany, just to see what it was like.
It's coming in the Netflix documentary on Matt Miller. All of this will be
Let me get to the decliners here.
Me too.
Super Microcomputer, the biggest decliner. And I think this is a fascinating sort of picks and shovels play on AI because the stock has grown so much faster than NVIDIA and now come crashing back down to about the same gains, but they had margins that disappointed analysts. So a big drop in Super Microcomputer today. Airbnb, the biggest drop on record, as much as 14%. The shares came down 13.4 there at the close because they had a disappointing bookings outlook. And then Disney, I think this kind of tells the story of the consumer, what we saw yesterday from TripAdvisor and Airbnb and Disney is that they're just not going out and making these bookings. They're not going to the parks as much as Disney would like. They did have people staying home and buying Disney Plus or watching Hulu, watching ESPN, but they're not seeing the growth that they want at the parks. So the real question, I think, from earnings over the last 24 hours is about consumers.
All right, guys, speaking of consumers, people watching Warner Brothers, let's get to their earnings just crossing the Bloomberg terminal. Adjusted EBITDA for the second quarter, $1.8 billion. The estimate on the street was $2.07 billion. Cash and cash equivalents, $3.61 billion. The estimate was for $3.21 billion. We did see the stock, initially I was looking at it in the aftermarket, coming a little bit lower. We'll bring it up for you in just a moment. What's interesting is what we really want to know about is them losing out on the NBA contract, that $76 billion deal that we saw that the NBA struck with Disney and Comcast and Amazon, and they're fighting that. Right now, you've got Warner Brothers down. Well, now it's unchanged, but we saw it down about 3.5%. They right now, Discovery, are suing NBA, though, for that alleged breach of contract.
Yeah, and it's interesting. We spoke with Jason Bazinet over at Citi earlier today. He actually doesn't think that the loss of that is going to be as damaging, at least on a financial basis. I think he said something like maybe a buck or so, maybe shaved off the bottom line, but he actually, on a per share basis, obviously, but he thinks that that will be recouped through other initiatives, cost initiatives that the company is taking.
Yeah, Warner Brothers shares bouncing around here from unchanged to down slightly following that $9.1 billion charge. A quick mention here of Duolingo, which is the company that provides software to teach languages. It has boosted its full year revenue forecast. The stock up slightly right now. Second quarter revenue for the period that ended, $178.3 million, beating the average analyst estimate. But again, that third quarter outlook does top the average analyst estimate.
I want to go back here to Warner Brothers. If you take a look at direct-to-consumer subscribers, they came in about 103.3 million. That's at the end of the second quarter. That was an increase on a sequential basis. But guys, their TV revenue is down 27%. Yeah, their theater revenue was up about 19%, but their TV revenue down 27%. And their cash burn was pretty, well, they repaid a lot of debt, actually. So they ended the quarter with about $3.6 billion of cash on hand.
Yeah, we actually heard this recently from a debt investor that the company, the shareholders are going to have a real problem, especially if they're able to do this spinoff. But he said he liked the company as a debt holder. Writing off your entire TV networks business for $9.1 billion is definitely not the kind of thing that you want to see if you're holding the stock, right?
Yeah, well, I mean, to be fair, it was sports and the ad market, so I guess it was a combo there. All right, just taking a look at Zillow here, you have revenue coming in at 72 million, I should say. That was definitely a pretty strong beat, and their outlook for the third quarter also coming in higher than estimated at the high end, looking at 560 million. In terms of an adjusted EBITDA, if you just look out to the third quarter, they're also looking on the high end of 110 million. So relatively solid. That third quarter EBITDA estimate, though, is a little light, even though the revenue is higher. The CEO, though, is stepping down, will be replaced by the current COO. So the current COO will be CEO Jeremy Waxman will be joining Zillow there at the top. Yeah,
that Zillow CEO stepping down for the second time, right? Like he's been trying to reinvent the company. He's been trying to grow the business, but it's been really difficult in that sluggish housing market. So you're looking at Zillow, though, nonetheless, up more than 5% here.
Let's go to Robinhood. The shares higher in after hours, trading by about 3.5%. Earnings across the wire right now. 2Q monthly active users coming in a little bit light, 11.8 million. The street was looking for 13.2 million. Though we should point out revenue did come in above estimates at about 682 million. Not necessarily seeing a forecast here, although the company does say its full year operating expenses will still be in the range that they had forecast previously here. But overall, it looks like assets in custody, whether you're talking about on the equity side or on the crypto side, beating estimates here. So did the bottom line. The shares higher by about 3.5%.
Take a look at Bumble shares if you want to know what happens to a company that cuts its full year growth forecast to almost nothing from 10%, right? Bumble had seen growth of 8 to 11%. Now they're coming out and saying revenue is going to actually just grow 1 to 2%. The street was looking for 8 and change. The shares dropped by about a fifth. No, about a quarter. Now, Bumble did actually have profit that beat in the quarter and revenue that was basically in line. They say they have 4.14 million users. That's also in line. Did you guys see the Ashley Madison documentary?
No.
See that?
No.
Not yet.
You should definitely watch it.
Okay.
Anyway, Bumble, they have paying users, more than 4 million, but they don't expect sales to grow more than 1% to 2%. And as a result, the stock is taken down by half, or by a quarter, I should say.
Okay, so in the press release, they say that we are resetting our guidance today to reflect actions we're taking to position Bumble to reignite user growth, deliver improved customer value, blah, 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 drive long-term revenue growth. I mean, you know, the usual happy talk. But resetting our guidance today, like you said, Matt, it's a pretty big reset to go from anywhere from 8% to 11% to 1% to 2%. I mean, they did not give analysts any kinds of heads up if analysts were looking for 8.4% on average.
Free cash flow down 23% year over year. I mean, it's not a good trend.
I can't believe you haven't seen the Ashley Madison
All right.
documentary.
I'll
None
put
of
it-
you
I'll
has
put it-
been
no.
tased
Yeah.
or seen the Ashley Madison documentary.
No, we're 0 for 2 here, Matt.
Putting it on the list.
That's a Matt Miller
Get
combination.
tased and watched the Ashley Madison documentary.
Right? Yeah, it is.
Exactly how I want to spend my Friday night. All right, that's a wrap, guys. Bumble down almost 30% here in the aftermarket. Warner Brothers down about 6.6%. Zillow, a gain of about 6.5%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Alex is heading out. Scarlet and Romaine finishing up on television. And you and I are going to finish up on Bloomberg Business Week. Folks, we will see you again, though. Same time, same place tomorrow.